All right, let's get right to it. The market is caught between two massive forces. You've got automated selling on one side, and on the other, this relentless demand for anything AI. For the next week or two, this is the entire game.
And it all comes down to one number, 6,600. That's on the S&P 500 futures, the ES. Seriously, this is the tripwire. What happens at this level is going to set the tone for the rest of the month. The moves from here will be fast, so you need to be paying close attention.
So here's our briefing. We're going to cover the core conflict, the headline risks, and where the money is actually flowing. Then we'll get into the playbook around that 6,600 level, lay out the bull and bear cases, and wrap up with two specific risk-defined trade setups. No fluff, just what you need to know.
At its heart, this market is a classic tug of war. You've got mechanical, price-driven sellers on one end of the rope, and on the other, you have these fundamentally driven, thematic buyers who just don't want to quit. Now let's break that down because it's really important. The sellers, they're mostly systematic funds, what we call CTAs. Their algorithms are already programmed. If we break 6,600, they sell. Period. And that could trigger a fast cascade down. But the buyers, they're looking at a much bigger picture. They're chasing the massive build-out of AI data centers and this global shift by central banks away from the dollar and into things like gold. It's basically robots versus a revolution.
Okay, so let's zoom in on the specific catalysts that are creating all this tension right around that 6,600 line.
First up, you've got rising U.S.-China tension over rare earth minerals. China has a near monopoly on processing, and the U.S. is threatening huge tariffs, which could disrupt supply chains. Second, and we've already hit this, is that CTA selling risk just waiting below the market. Third, we just got to look at bank earnings. Think JPMorgan and Wells Fargo. They give us a real read on the economy, and the message was pretty clear. Things are holding up, but they're cautious. And finally, a shaky truce in the Middle East is taking some of the fear premium out of the market, which is helping to keep a lid on volatility for now. So with all these risks, you might think money's hiding on the sidelines. But that's not what's happening. Capital is moving, and it's moving with conviction into some very specific areas. Let's follow the money. The money trail is crystal clear. AI infrastructure is a huge theme. Think Broadcom, but also these Bitcoin miners like Mara that are pivoting to power data centers. Well, all that AI needs a ton of energy, which is why you're seeing money flow into nuclear plays like UUU. And then there's that de-dollarization theme, pushing capital into hard assets. The gold ETF, GLD, is seeing record inflows, and that's not retail money, that's institutions and central banks. This content is for educational purposes only. It's aggregated analysis from multiple public sources to help you stay informed and improve your own decision-making. Do your own research. This is not financial advice.
Okay, so how do we trade this? We need an actionable framework, and it all pivots, like we said, on that 6,600 level. Here's the playbook.
Our base case assumes we chop around, as long as we stay above 6,600. The right posture here is patience and a lot of cash on the sidelines. Now, the bull case gets triggered if we get a firm break above 6,650. That's your green light, your confirmation that dip buyers are in charge. Time to put capital to work in those strong themes. The bear case, that's a decisive break below 6,600. If that happens, the CTAs start selling. The plan is simple. Hedge up, move to cash, or even look for tactical shorts.
This whole playbook is really built on two competing stories. Two very clear paths the market can take from this exact spot.
So the bull thesis is pretty straightforward. This AI story is just too powerful. It's a secular trend that can absorb the selling. The market holds 6,600, all the weak shorts get squeezed out, and we grind higher. The bear thesis, on the other hand, is that valuations and geopolitical risks finally catch up to us. The break of 6,600 isn't just a dip to be bought. It's the trigger for a bigger machine-driven sell-off that fundamentals can't stop in the short term. All right, let's get specific. I'm going to give you two risk-defined ideas that plug directly into these themes of AI infrastructure and the energy it needs. First up is Marathon Digital, ticker ARMAA. The idea here isn't really about Bitcoin. It's about the market waking up and realizing this company can use its massive energy infrastructure to pivot into the AI data center business, which is in ridiculously high demand. For this, a long-dated call debit spread makes sense. It lets you play for that potential upside as the market re-rates the stock, but, and this is key, it strictly defines your maximum risk and keeps your costs down. The trade is wrong if management can't deliver on this pivot or if the stock simply breaks down through key support levels. The second idea is Energy Fuels, ticker UUU. This is a pure play on the energy that AI desperately needs.
What makes this interesting is you have both the fundamental story, the need for nuclear power, and a technical signal because we're seeing reports of some very large, unusual call buying in the name. So the positioning is direct. Something like long calls or a call spread gives you that directional exposure. You're betting that UUU is a critical supplier for the whole AI build-out and that the smart money flow is telling you something. The thesis gets invalidated if the whole market rolls over in a big risk-off move or if some negative headline about nuclear policy comes out. Not trading advice, just a market update to keep you informed. Markets carry risk. Trade your plan, manage downside, and verify all data.
So that's the setup. It all boils down to one question you need to be asking yourself right now. Will the unstoppable force of this AI secular trend be enough to overwhelm the immovable object of systematic selling that's waiting right below us at ES 6600? That is the entire game.